Today is a Tuesday, 8th of December. My name is Dylan, and let's kick off with a few interesting pairs. So the US dollar has been appreciating against a few currency pairs since the job data last Friday, as it shows a consistency in the employment data, which leads to the Fed going to raise interest rate most likely in December 16 itself. So let's take a look at the Aussie against the US dollar. So this is the forward chart. As you can see, that there is a rising trend channel, and price has was already at the top of it, got pulled back and starts to fall all the way. Right now it is about to touch the bottom of the rising trend channel. So we are going to look for an opportunity to go for a buy as it reaches the bottom of the rising trend channel. So let's take a look at the 1 hourly chart. Alright, it's really about the touch, so very soon, probably in the next 15 minutes or half an hour to an hour itself, we might be able to see an opportunity to go for the buy. So that's really very straightforward for the Australia against the US dollar. And if we look at the day one chart itself, we have seen that the price has been resisted strongly at the exhaustion level, the price of or rather the resistance level, the price of 0.7339. So if you were to go for the long at the bottom of the rising trend channel, the very first key level you have to look out for is at the resistance level. Alright, that could be where you should really take profits, because end of the day we are still expecting that the price will continue to fall, or the Australian dollar might still gain further because it is yet at this comfort region at the price of 75 cents, based on statement by the Reserve Bank of Australia, Garth Stevens himself. Alright, so next we have the New Zealand dollar against US dollar. So in the forward chart, as you can see, that there's a rising trend channel. Price has already broken above, but yet it came down all the way back, and right now it is at a kind of a support level at the price of 0.6630. And if we zoom in the 1 hourly chart again, we do note that there is actually a rising trend channel, and the price has broken below, and therefore it may actually signal for a further depreciation. And of course, a lot of economists is actually looking at the Reserve Bank of New Zealand to actually cut interest rate this month. So back to the forward chart, we do see that there is actually a chart pattern that supports the fact that the New Zealand dollar may depreciate against US dollar in the coming few days, or probably in today itself to tomorrow. As you can see, there's a chart pattern that's forming right here, a head and shoulder. So this first shoulder is right here, the head, and probably waiting for the price to appreciate a little bit back somewhere to the price of 0.6683 to go for the sell, as it forms the second shoulder of the head and shoulder. Alright, and next let's take a look at the euro against the US dollar. Right, so back to the day one chart, we have seen that the price came all the way down, and it jumps as it almost touches the lowest point, the price of 1.0469, and it has surged all the way due to the surprise and the disappointment came from the European Central Bank by the President Mario Draghi. And it's got resisted at the Fibonacci Retracement level of 38.2%. The price of 1.0974 came down as it makes a correction. And let's zoom in the forward chart. So price has came all the way down, and probably let's remove the Fibonacci retracement based on the day one chart, and zoom in into 1 hourly chart, and we can pull out a retracement, Fibonacci retracement from the bottom to the top. Right, so we've seen that the price has got supported at the retracement level of 38.2% as well, based on the 1 hourly chart, and that's at the price of 1.0800. And based on the chart pattern, the structure right now, there could be a possibility the price may continue to appreciate after all the consolidation since the rally itself, and so we can actually wait for an opportunity to go for the buy. Alright, this structure itself does support the price to go even higher from here. So let's maybe just wait for the price to retrace a little bit and to see if we can get a better price to go for the buy. So let's just observe for the time being. And next, let's take a look at the pound against US dollar. Back to the day one chart, as we know that there is a falling trend channel. Price has reached the bottom at the exhaustion level as well and rebounded off. And right now price is also making certain retracement as in correction. And again, the structure itself does support that the price may appreciate further again. Price has yet to reach the falling trend line, so we are expecting price to appreciate very soon if it were to appreciate. So let's just wait for a clear reversal signal, a trading signal for us to go for the buy at the current level. Or if it were to retrace a little bit further more, then let's just wait for the price to, or maybe back to the 1-day chart. Let's plot a Fibonacci retracement. Right from the bottom to the top, it has broke slightly below the retracement level, 30.2%. So let's wait for the price to touch the Fibonacci retracement level 50%, or at the retracement level 61.8%, the price of 1.4994. So that's for the pound against US dollar. Next, we have the dollar against the Japanese yen. Back to the 4-day chart. As you know that there's a range, and the price has been bouncing within the range itself. It almost touches the top again, the top of the range again, and we have seen that the price has begun to fall right before that. And the 1-day charts, yes, we do see that there's a structure that actually supports that. Back to the 15-minute chart. Well, there's still a possibility that the price may still appreciate again till it touches the top of the range. So probably we might want to wait a little bit further. But if price were to retrace at this moment and got resisted by any of the moving averages, then we may want to go for the sell instead. So that's pretty much for the dollar against Japanese yen. And last but not least, we have the dollar against the Swiss franc. Back to the 4-day chart, as you can see, the price has fell and tumbled together with the euro, which actually gains. And we've seen that the price has been resisted at the price of 1.0024, very close to the retracement level of 38.2%. So we do expect that the price may continue to depreciate, so we might want to wait for the price to retrace a little bit from here. Either, since we have seen that the price has begun to fall, we can wait for the price to retrace back to the trend line as I've just plotted right here, or if it breaks above, then back to the resistance level at 1.0024 again to go for the sell. Last but not least, I would just like to touch on the dollar against the Canadian dollar. Let's go to the monthly chart. We have seen that the key support level is at the price of 4.3884, and price based on the monthly chart has finally broken above. So if we look at the 4-hourly chart itself, there is a very strong appreciation as it breaks above the key resistance support term resistance level. Maybe let's just put it up a little bit at the price of 1.3397. So that signals that the price may continue to appreciate further, and of course supported by the fact that the Federal Reserve may raise interest rate in December 16. So all we can do right now is to zoom in the 1-hourly chart, plot out a Fibonacci retracement from the bottom to the top, and wait for the price to retrace back to some of the key support level based on the Fibonacci retracement. Right, and maybe just touch on the euro against Australian dollar. In the 4-hourly chart, we do see that there's a very long falling trend channel that's been forming. Finally bounced off from the bottom of the falling trend channel, and then yes, also it got resisted at first at the top, came down a little bit, and it appreciated again and break above, and has broken above the top of the falling trend channel, which signals for the price to appreciate further from here. So similarly, we may zoom in the smaller time frame based on the 15-minute chart, the 1-hourly chart, to look for retracement and to look for the price to go for the buy. Alright, so that's all for today. So thank you for watching, and I'll see you again.